Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Friday, February 22nd, 2013. Thank you all for tuning in. Let's jump right into the charts here. We'll start off with the usual S&P 500 E-mini futures. The futures are catching a sizable bid up this morning, trading higher by about 8.5 points to 1509.5, 1509.25 thereabout. But a decent little pop before the opening bell. It looks like you do have one of these Fed guys coming out on TV today, basically on CNBC, saying that they're going to keep the monetary policy the same. So I think the markets are rejoicing over that. So it looks like Fed President Bullard saying Fed policy is going to stay easy for quite a while, and that's they're trying to come out and reassure the markets that we're not taking away any quantitative easing. But when the party's over, the party's over. If the market decides they're going to sell stocks and they don't believe anymore in the Fed or all this inflation that's being created and money printing that's going on around the whole entire world, then things are really about to get rocky. So I think traders need to still be a little bit on guard here. But again, you're going to get a lot of talking heads from the Federal Reserve coming out. And we'll just see how it plays out. But again, this is why we use charts. We could care less what they say. We just watch the money flow, watch the chart pattern, do what it tells us, and that's ultimately how you want to trade. So again, that's what's happening this morning. You do have a Fed president, I believe his name is Jim Bullard, saying Fed policy to stay easy for a long, long time. And that's been the case since December 2008. Essentially, we have negative interest rates. Fed funds rate, which is the overnight lending rate to Bank of America, JP Morgan, Citigroup, and Wells Fargo, is essentially at 0%. So the banks get free money. Meanwhile, they charge you 18 to 20 to 30% on your credit card, and they pay you nothing in a savings account. But this is the system that we're working at. So again, take it for what it is. But right now, markets are up a little bit. We'll see where they close today. Generally, on Friday, we look for the markets to close flat to slightly positive. So I wouldn't rule that out. I think that's where we're going to probably wind up by the end of the trading day. So we'll see what happens here. A couple of other things to go over. One, the European markets. European markets are all catching a bid today. You do have the German DAX up about 1%. You have Italy up about 1.5%. Spain up 1.5%. And you have the French CAC 40 catching a really big bid, and that's up 1.8%. Yesterday there was a CEO on CNBC that came out and said the French were outright lazy workers. So, I mean, there could be a lot of confrontation starting here between a lot of American companies in Europe with comments like that. But nonetheless, the French CAC 40 today, any way you slice it or dice it, is up over 2%. And that's a pretty big rebound when you look at how this market's traded over the last week or so. But a pretty good bounce there in the CAC 40. That's up over 2%. So traders should watch a lot of the European ADRs today. Could be in for at least a small rebound, I would suspect. In Asia last night, you do have a few things going on there. One, the Shanghai index finished down about 0.5%. The Indian Sensex, which is the Bombay Exchange, that was basically flat. And the Nikkei 225 trading higher by 0.7%. So again, the Nikkei catching more of a bid. And I got to tell you, you did have a Japanese finance minister come out and say they want to get the Nikkei up to 13,000 by the end of March. So far they are continuing to try to push it there, devaluing their currency each and every day, along with the rest of the central banks around the world. So again, this is what we're dealing with. It's going to end ugly, but nonetheless, you got to trade it while it's there. All right, let's see what else we have here today. I know we had some economic numbers out of Europe. They were a little bit better on one end. Spain was worse. I don't think there's any major economic news. One of the earnings plays that are out today is HPQ. This is catching a nice big gap up this morning. May have a little bit more upside to it. So HPQ, nice gap up after reporting earnings, beating analysts' expectations. So that may have a little bit more upside, but I don't know if it has a ton from here. You also had some other big stocks reporting as well. I think AIG came out with numbers. This stock is not really doing all that much. It closed at 37.28 today. It's trading at 38.75, but I don't see any major upside for this one, so I'd be a little bit careful with AIG. You do have Intuit, INTU. This is trading at 61.36. It closed right at 61.30, so I don't see anything all that great on that one either. So you really kind of want to leave that one alone. But there's some plays out there. We do have about 1, 2, 3, 4. I think 4 or 5 gap plays. I'll work on one after I get done with this report. But we do have about 4 or 5 gap plays for the chat room this morning. So anybody interested, come over to the chat room. Take out a 7-day free trial. You'll see what it's all about. Get to watch our monitors and everything, and get all of our gap plays at least in the first hour. Some people have now turned into a 1-hour trader, so it's pretty neat. But come on over, take a 7-day free trial to that if you're not in that. And the gap plays will be released right around 9 a.m. Right now it's 8:30 in the morning. But I don't see any economic data out for today. It is a Friday. Again, volume will probably get light around 11:30, 12 o'clock. So be prepared for that. And like I said earlier, normally on a day like today, we look for the markets to stage a flat to slightly positive day, and we'll stick with that forecast at the moment. Okay, let's take a look quickly at gold. Gold this morning is trading basically flat on the session, right around the 1575, 1576 level. Here's the GLD for those of you, and you can see it's trading right around 152.55. It closed at 152.62, so you can't make too much out of it. The dollar remains very, very strong at the moment, so the dollar giving back a little bit. It's negative by 3 pennies, which is not really bad action for the dollar. Dollar's starting to consolidate, so that could be talking to us down the road, maybe next week or the week after. But in any case, dollar's holding firm. You're not seeing much action there. What we are seeing is a little uptick in oil. Oil has been driven down recently by the stronger dollar. Somebody should tell that to the president. Right now, crude is up 33 cents to $93.17 a barrel. Let's take a look at the USO, which is a good proxy for light sweet crude, and that's trading right around $33.50 at the moment. So, again, you can't make too much out of it. There still looks to be fairly good support from where I showed you yesterday when I said 33.40 would be the support level for oil, and sure enough, you could see how it came right down there to my line, and it held up. No great bounce off of that level, but it is still holding that level, and I do suspect that it can hold up throughout the session. So we'll see how that plays out a little bit later. But I want to wish you all a great trading day, great weekend. Those of you in the chat room, I will see you in a few minutes around 9 o'clock. The gap plays will be posted. Have a great day, everybody. Take care.